channel. I just want to talk about my like what I look for when I invest in stocks. So the first thing I look for is a debt to equity ratio of under one. I don't want a company that just has too much debt. I'm fine with debt. I think debt is good. But if it's not debt I'm personally taking on, I don't know all the risks associated with it, and I don't want to be investing in a really big company that is just taking on too much debt. And then payout ratio. This is pretty important too. I want to make sure I always invest in a company that has a dividend, but they can't be spending too much money on the dividend that they don't have enough capital to reinvest. The third thing I look for is price to earnings growth ratio. I think if it's below one, then that's really good. It means that their earnings are growing really quickly, and I like that a lot. And then the price to earnings ratio. I'm actually not sure why that's on there. I don't care about that. Um, and then annual dividend yield. They just have to have a dividend. I don't care how high or high low. If I own a good stock, I want to be able to, when it's overvalued, but I know it's going to keep going up, I don't want to have to sell it to put capital outro. So that's why I like dividends, because I can relocate the money without having to sell the stock. Um, and then the other stuff I like to look for, I'll pull up here. I have my own thing for all my investing. So yeah, here. So there's the other stuff I look for. Um, the price to free cash flow ratio has to be less than 67% of the current share price to earnings ratio, which I'll pull that up right now. That's basically um, as you can see right here, it's based on the average inflation adjusted earnings from the previous 10 years. It's also known as a cyclically adjusted PE ratio or CAPE ratio. So right now that's at 37.56. So I would want the price to free cash flow to be um, less than 25. Um, yeah, and then so that's that. They have to have a dividend. The forward price to earnings ratio, yeah, that's the other thing. It has to be above what their current price to earnings is at, because I don't want to buy a stock. Like as soon as I buy a stock, I don't know. I mean, I guess it's not that important, but I want to get a bit of a, I don't know what the word is I'm looking for, but I don't want to buy it I don't want it to drop down afterwards. And I think in general, if the forward price to earnings ratio is good, people are gonna buy it if there's an earnings surprise, because then it looks a lot better. Um, let's see if I can find one with a good forward price earnings. I don't know if I can. But yeah, it has to be optional. And the reason I like that is I like to find stocks that people are more optimistic about. Yeah, like this one right here. The put to call ratio for the 1 day and 30 day are below 0.7. So people are optimistic. So I like this. And then recent IPO, yeah, I don't want to invest in stocks that haven't released their first 10K yet. Just because you never know if a company's trying to hide stuff. I mean, I guess they do have the S1. I got that from reading how do I forget the name of it? Security analysis, I believe. Yeah. It was this book. Yeah, I read the fifth edition. Yeah, so I don't know if that was before they had S1s or not, but I just stick to that anyways. I like the return on invested capital to be higher than the weighted average cost of capital. So I do all these calculations here. And I've narrowed down to 2 stocks actually I'm thinking about buying currently that I think are good buys right now. One of them is the ticker is ZIM. They are based in Israel. They are a shipping company. They have a crazy high dividend, but a pretty low payout ratio too, which is crazy. Extremely good earnings, as you can tell. The price to earnings ratio is 2.4. Their forward price to earnings ratio is 1.7. The put to call ratio is very low. They haven't gone anywhere but up since they IPO'd. They didn't IPO. They IPO'd last January, so they've been around for just a little more than a year. In the New York Stock Exchange. Then there's this other one. The ticker was MKSI. I really like this one too. Yeah. Although that's changed since now. The 30-day put in call ratio has gotten a little bit more pessimistic. But everything else still looks great. What else? Yeah, that's basically it. That's what I look for. But honestly, the most important thing to me is a management team. That's just the financials. After that, I like to look through the management team. Because honestly, I wouldn't consider myself a value or growth investor. Any company that has a good management team has a bright future, I think. But yeah, I look for good, strong financials first, because it's tough to look through thousands of companies and just look through each management team. That would take forever. But yeah, I guess that's just my investing. The way I like to invest. And then the next video I'll go over how I like to make my price targets for my investments. Thanks for watching the video. Please like and subscribe. I really appreciate it. And please comment down if you have any other things you'd like me to talk about in future videos, or any feedback for me. I'd greatly appreciate it. Have a fantastic rest of your day.